Welcome back to another episode of Borak Bersama Maybank. With market volatility rearing its head again, some of our investors have been turning to us for some defensive stock recommendations. So timing-wise, our Malaysia REITs analysts' latest report could not come at a better time. So with that, we have once again invited a returning guest onto the show. It's none other than Malaysia REIT sector analyst, Miss Syifaa. Welcome on board, Syifaa.
Hi, thank you, Najib, for the invitation.
Thanks. So let's first talk about the current situation on the ground here in Malaysia. In terms of the retail and office rental space, has there been any improvement since the pre-pandemic and post-pandemic eras? I think with that, another natural question would be whether this has any impact on your latest sector earnings forecast as well.
Hi, yes. Average occupancy rates of shopping complex in general higher in second quarter to 4 at 78%, but still below pre-pandemic level of 79%. The retail segment continues to face challenges from new supply, especially in the Klang Valley. Despite that, we remain positive on matured malls located in prime locations, as we expect high occupancy rates to sustain due to continued strong demand for their retail space. Retail sales as a whole is projected to grow by 4% in 2024, but rising cost of living in the industry is the biggest challenge. However, EPF account 3 withdrawals, civil service salary revision, and strengthening ringgit could support or boost consumer spending, which augurs well for retail assets. Stronger tourist arrivals will also encourage footfall traffic and tenant sales. On the other hand, average office occupancy rates in Malaysia remain soft in second quarter to 4 at 71%, and this also still below the pre-pandemic level of 81% in 2019. But on a positive note, Klang Valley offices continue to attract MNCs as they establish their regional hubs, and rental rates has also demonstrated positive momentum driven by high-quality office space. Overall, we forecast sector calendar year 24-25 earnings growth at 8.3% and 9.8% respectively.
All right. Thanks, Syifaa. Now, I think with the US Fed's funds rate, basically the easing cycle that we see, and our economics research team's expectations of no more Bank Negara rate cuts for 2024 and in 2025, this should have created an environment for foreign investors seeking for better yield to potentially look at investing in Malaysia. Given the defensive nature of the REITs, do you think that this could be a positive development for our local REIT sector?
Yes, it is. MGS 10-year yield is now moderately lowered to 3.72. Our fixed income research is looking at 330 and 2024 and 2025. The yield spread between MREIT's forward dividend yield and MGS 10-year yield is now widened at +1 standard deviation above its 10-year mean. The higher yield spread offers a better risk-reward opportunity for MREITs.
Okay, so that's looking at the landscape. So before we wrap things up, let's talk about specific REITs. From your latest REIT sector report, I can see that we have quite a few buy calls, 6 to be exact. We have buys on IGB REIT, Sunway REIT, Pavilion REIT, Axis REIT, CLMT, as well as Central REIT. Among the 6, which is your top pick for the sector and why?
Axis REIT is our top pick, supported by strong exposure to the industrial segment and active search for new assets to grow its portfolio. Year to date, it has announced highest acquisition of the year, about 700 million ringgit, to complete this year.
Okay. For the benefit later, we'll be putting the some of the dividend yields that we've shared, as well as the targets as well. So thank you, Syifaa. Aside to the audience, you can catch Syifaa's latest REIT sector report on your Maybank Trade MY app. Just head on over to the Insights tab and you will be able to find the report there. And for those who are looking to kickstart your trading journey, you can apply for a CDS or trading account online via the QR code on the screen now. If you need a more personal touch, you can also approach our sales representatives and they can help you get started on that as well. With that, we thank you, Syifaa, and we'll catch everyone in the next episode. But until then, this is Najib Hussain signing off.